Should note you still have a buy rating on Apple. Why not any longer-term concerns here?
Sure. So basically, when you think about the coronavirus, the challenges that we're looking for are supply chain disruption, which you're seeing with the iPhone, and then loss of sales to Chinese consumers, which you're also seeing with Apple, which has, generally speaking, 15% of their sales to Chinese consumers. Now, as far as long-term risk goes, I think it's going to depend on the duration of the virus. So if you look at the data, actually, that CNBC provided, you saw on a week-over-week basis a doubling in the number of cases, confirmed cases, and a doubling in the number of confirmed mortalities. So I think that it's still too early to determine the long-term impact on Apple and others.
Okay.
When we adjusted our numbers, we took about a 10% hit to the March quarter, 5% to the June quarter, and 2.5% to the September quarter on the notion that the duration may be longer than investors anticipate.
Often, for these companies, it's not Apple that hurts as much as those suppliers for whom Apple might be their biggest customer and kind of define their whole cycle throughout the year. So who are some of those suppliers that you think are most vulnerable, at least the ones whose stock price doesn't currently reflect those concerns?
Sure. So I think you talked about the chip manufacturers. I think that is a challenge. And an argument can be made that you will have maybe a greater sense or a greater amount of lost sales than just a shifting of sales into later quarters this year. So I think, but broadly speaking, when I look at the impact from a disruption on a supply chain standpoint, I think about companies like Amazon and Wayfair that sell a large portion of products out of China, and a prolonged supply chain disruption could have a negative impact on them as well.
Which I don't think a lot of people for Amazon are factoring in right now.
Yeah, they source a lot of products from there. You say that there are companies that are actually well positioned to weather and maybe even profit in this environment, and you include in that group Fitbit, Grubhub, Pinterest, and Roku. Explain.
Yep, so the basic thesis there is you have kind of two groups. You have companies like Fitbit and Sonos that, because of the prolonged U.S.-China trade issues, pulled their supply chain out of China and moved it to other countries. So they're actually insulated, kind of independent of the duration of the coronavirus. And then you have a second set of companies like Roku or Pinterest or a Grubhub, where to the extent that the coronavirus inspires consumers to stay home, and in the case of Grubhub, order in or watch more television for Roku, it could actually be a net benefit.
And these would be U.S. customers you're talking about here with Grubhub and Roku, principally?
Absolutely, U.S. customers. Yep, good to point that out. And the basic thesis would be that as consumers that are sick globally are more concerned about spreading it and contagious of that nature, that would inspire them to stay at home more than they would in the past. And that's why it could be beneficial to a Grubhub or to a Roku.